Okay, hello everyone. Thank you for joining the Startup Game Changer LinkedIn live event today. Today we are going to talk about how to get funding from a venture capitalist. My guest is Abhi Mukherjee. He's a great friend of mine. We are also part of a group called TIE, TIE. Abhi is the operating partner of Seracap Venture Group. Seracap is a VC firm here in Newport Beach, very large. They have done phenomenal work in the VC space, and funded a couple of very good startups, and they have exit also. We will be touching upon on that. He is a successful entrepreneur. He built a company and sold that company, and then he ventured into the VC world. He is a growth strategist, so startup founders who is looking for growth, Abhi Mukherjee could be a good person for you to reach out and talk to him, pick up his brain, or bounce your idea. He is innovation evangelist, and when it comes to innovation, people think that yeah, what we are developing, what we are doing is innovation. But talk to Abhi, look at some of his LinkedIn posts, and you will understand what real innovation is. Abhi is a public speaker also. He does a lot of emceeing at high-end VC events as well as startup events. He has been appearing quite constantly on television. So with that, Abhi, welcome to the show, and please go ahead and touch upon your background. You're from IIT, and then you did your executive education from MIT also. Touch upon that. Touch upon how you landed into the VC world.
Wonderful. First thing first, thank you so much, Anshuman, and these wonderful Startup Joyride team for inviting me to this LinkedIn Live session. This is phenomenal, and good morning, good afternoon, good evening to all, whoever you are, wherever you're joining us from. And I hope today's conversation is going to be something that can kind of have some key takeaways, and I could share something that would be beneficial, or you may have heard or may not have heard, but it's always good to have a refresher. So on that note, I don't want to date myself, but I also come from an era where unicorn was considered to be a mythical creature, not a business model. So, and but yes, I'm born and raised in India in a very small town. And in that town, there were two mandates from parents: either get into IIT or CPMT, which is a medical exam, or get out of the house. So I decided to kind of get into IIT. And being a proud IITian, I was also exposed to a startup journey very early on during the Y2K days, and have been able to kind of successfully save the world from converting YY to YYYY, those who understand the joke. But yes, fast forward, I was picked up by Infosys, have had the chance to work with some of the greatest minds at Infosys when Infosys used to be a very small company. And thereafter, I was picked up by UST Global, and I was responsible for sales for almost 8 countries. And that's where I met the wonderful team that constitutes here at Seracap Ventures, because this is the same team that started the corporate venture capital group at UST Global. And the success that drove us back then led to the belief that well, it is time for kind of taking it to the next level and start the chapter for Seracap. While that was happening, I wanted to delve a little bit into the world of AI. Have had a brief stint at Wipro, and also then I started my own company, Nirveda Cognition, along with few like-minded folks, being supported by some able investors. And 2021 is when we made an all-stock deal exit, and that's when I was thinking what to do next. And that's when I had a conversation with the CEO of Seracap, Saurabh Ranjan, that hey, it's time for you to come to the dark side. And I decided to join Seracap Ventures as an operating partner. Looking back, wow, 3 years have already passed, and here I am right now in front of you, trying to share what I have learned being an entrepreneur, being on the corporate leadership side, CVC, and now full-time venture capitalist. Apart from that, one thing that I would like to also kind of give a shout out to my friends at New Mexico LEAP program, Lab Embedded Entrepreneurship Program, focusing on some of the deep tech innovations that is really kind of taking our journey to the next step and looking at nation's national security interests. I happen to be an advisor to their SLC, which is a Strategic Leadership Council, and it is a consortium between Los Alamos National Lab and San Diego National Laboratories, wherein we are helping the entrepreneurs who have the dream in their eyes to really create an impact in the deep tech space. So I hope, Anshuman, that was good enough, huh?
Yeah, this is exciting. This is so kind of you to find time to be on this LinkedIn Live. Let's dive into the topic. How to get funding from a VC. Who is a VC? When a startup founder should think that they are now ready for a VC check.
So that is a wonderful, wonderful question. I always advise folks to really kind of not go for a VC early on in the game. It is very important to understand who VC is so that you can tailor your approach. Venture capitalists are the ones who would come in. Of course, they might participate in a safe note or a convertible note, which is a debt round, which will become an equity in the following round. However, it is very important to understand they are someone who is going to invest in your idea early on, not too early, but when you have at least some traction going on. There is some kind of validation. You do have a minimum viable product, and you are getting some sense from the market that, yes, there is a need for what you are trying to develop. Prior to that, there are other mechanisms, for example, angel investments. Maybe you can affiliate yourself with an accelerator, incubator, or if you're not so sure how to kind of go about it, there are venture studios that are out there to help you kind of stand on your feet. And when you are ready for the growth capital, that's the time you should be approaching a venture capital firm.
Okay, great. So a company who has traction, who has revenue, any bracket that you would like to give, like $100,000 ARR is good enough, or it should be a little more. The MVP, paying customers, and 20, 30 paying customers. What are those numbers, if any?
So that's a wonderful question. Reason being, that's where the qualification comes in. Not every VC is born the same. So is every startup, you may say. So there has to be a match. There has to be a fitment. You have to understand who you're approaching. For example, Seracap believes in the thesis of early stage investments, B2B startups in healthier, secure planet. Of course, with technology intersection, preferably AI. So you cannot come to me with a blockchain idea. And when I say idea, it's not even a company, it's an idea, and asking me to invest, because that goes against my investment thesis. So do some research. Understand what kind of companies I have had invested in that are my portfolio companies across the previous funds. And then get a sense, is there a shot? Would they be investing a similar idea? Not same, but similar idea. Oh, I see that you have invested in something that deals with the gut and the microbiome. I'm doing the same. Can you give me your investment dollars? Likelihood is that I would be more inclined to invest in something which is more disruptive and innovative and in tune with the time, because timing is everything. So there are certain elements that you have to consider. What is the stage this venture capital invests in? Is it a pre-seed? Is it a seed plus? Or is it like a pre-series A? You have to understand the range. Then the geo consideration. You may blindly reach out to a European VC. Guess what? They don't even invest outside Europe unless they have mentioned, yes, we are open to investing in geos outside Europe. Try to understand what has been their pattern. It's very critical for you to understand your audience. Similarly, you have to understand who you are approaching as investors. Moreover, not all the type of money is same. Some of the founders might say, well, give me money. I'm just going to really get you the multiples, and I'm not going to be needing any help from you. But then there are others who are not just looking for money. You can get money from anywhere. But the quality of money is important. Do you want this VC to help you with some advisors? Do you want this VC to help you kind of making some critical decisions, or help you during the decision points when you are conflicted as a founder? So there are those many elements. Can this VC open new vistas, horizons, networks, ecosystem for you, so that you can just kind of latch onto their ecosystem and thereby have new investors, maybe have new customers, and the thing goes on and on and on. It all depends upon what you want from this relationship. This is
Mhm.
this is not just a transaction. If you see this as a transaction, well, I think it's not a win-win strategy. So win-win strategy comes when you see this as a bi-directional relationship, a partnership that's going to last for probably 5 to 7 years, maybe 8. Who knows?
Right. So there are a lot of questions which are coming, and while you were speaking, I was scanning some of the questions, and I'm going to club them and then ask you such questions. So one is certainly what I heard in your uh, speech, that the founder must research the VC, what type of VC they are, what type of portfolio they have invested in, then reach out to the VC. What should be the preparation? How should be the reach out? Cold email coming to you, or they found your email ID on Apollo, or a LinkedIn connect? If a LinkedIn connect, what should be the frequency? You are very very busy. You cannot answer all the messages that you are getting on a daily basis. Phone calls, yes, no. Then straightway shooting the pitch deck, or there should be some intro, gauging your interest, and then shooting your pitch deck. Real quick, we are already in our 11th minute, and this is only a 30-minute show. Okay,
Yes,
go ahead.
yes. Um, it is very important to kind of get to the specifics. If you start your email with the once upon a time there was a prince in a galaxy far, far away, you have lost my interest. Probably any email, the subject line has to catch attention. Why I should be spending the next 30 seconds on the email body? Forget about even opening the attachment. In terms of LinkedIn, yes, feel free to kind of reach out and give a context. Do not try to kind of have those pleasantries. Get to the point, because time is a very vital commodity. Phone, I would say no, unless there is a context setting that someone who I know and trust, and that person is telling me that, hey, you can expect a call from XYZ at this time. This might be the number. Then there's a context. Otherwise, most of the times there are like so many who are trying to kind of engage attention. That may not be well reciprocated.
Okay, great. The pitch deck. So they should reach out to you. The subject line has to be interesting enough. The pitch deck. How your pitch deck, a pitch deck going to a VC is different from an angel pitch deck. How much details, or how 30,000 feet view would you like to get in a pitch deck? And what are some of the common slides that must be in the pitch deck to gauge your attention?
That's I would say commonly asked questions, frequently asked questions, FAQ. So let me paint like in terms of a framework, so that it helps with respect to your understanding of how you should be presenting your brand, which is yourself, as well as the company that you represent, the startup that you are formulating. Let's draw a picture. PICTURE. P stands for problem. The problem as to what's the genesis of this particular pitch deck. Why are you even kind of thinking about starting a company? It's the fundamental thing with respect to defines not about your vision, mission. I'm not interested in that. Get to the point. Tell me your purpose, what problem you're solving, and why. The what and the why is more important than how at this stage. Innovation, I for innovation. It is not just the idea is commodity, but how you intend to implement it. What will be your moat, the moat around your business model? How you intend to kind of use this innovation to create what kind of impact and value? That is the innovation aspect of it. That is really the fun or the excitement factor that's going to get me excited that yes, this is worth my time and consideration. C stands for competition. When you come to me and say that I am folk, FOAK, first of a kind, I will have serious doubts whether you have done your research or maybe you are really first of a kind. You might be, but it's very important to acknowledge competition, even if this is a parallel, because it gives you a fair idea about the timing of your concept, whether it's well timed. What is my market? Where I'm going to be playing? Is the TAM SOM good enough that I'll be making decent revenue and I can call for multiples? It is very critical to have that competitive analysis. T stands for tribe, not team, tribe, because your vibe attracts your tribe. It is very important to have the like-minded folks in the team as well as your board, if you have one, the advisors around you, the ecosystem that you play in, because the tribe is very critical. That defines the culture of the company, because culture can eat strategy for breakfast, have innovation for lunch, and agility for dinner. So it's very critical to focus on the cultural aspect of it, which can be only defined by the tribe. The U stands for, I would say, UVP, which is unique value proposition, because it's very critical for you to define that this is my niche. This is how I'm going to create value. This is how I'm going to be generating revenue through this product. There's why there is a need for it. There are people who are endorsing it. R is relevance. This is where most of the founders fail. Relevance is going to change from one deck to another, because depending upon who you're reaching out. Relevance is how am I relevant to your journey? Even the VC firms have commitments to their LPs, limited partners, to their investors. Understand their world, their pain points, their KPIs, and align yourself to kind of show them that, hey, I know that maybe you are into fourth year of your fund and you have 4 more years, because it's 8+1+1. Technically, most of the fund, that's how they operate. So I might be able to kind of give you real good multiples maybe in the next 3 years. There is a horizon there, and I would be able to show you the trajectory and why you should consider, why it falls into your thesis, why it is a good bet for you, because someone is gonna really kind of taking a bet on you. So you need to really act on the relevance aspect of it. And E is very simple: exit strategy. It's not just exit. The destination is important, but you have to outline the journey. At what stage you are going to do what kind of funding rounds you're anticipating, what kind of the financial projections that you're going to be sharing. So that E for exit becomes very, very critical for the VCs to consider when you're approaching and pitching them.
Thank you so much, Avi. So obviously, a pitch deck that is prepared for angels is very different. And as you came up with this picture, PICTURE, problem and purpose. I stands for innovation, C for competition, T for tribe, U for UVP, unique value proposition, R for relevance, and exit, E for exit strategy. So thank you for putting it out. Many people in the audience, and when we will repurpose this podcast, will be very, very beneficial for them to go through it and understand it. There was an interesting question that how much equity should a founder be ready to give to the VC? This is the first time VC raise. What should be the equity that they should be willing to give?
Well, this is a very, very, there is no one size fits all. There is no silver bullet for it. But you need to know one thing, that you need to be able to kind of have a decent valuation justified by the numbers, the market conditions, and some of the comparables, and be prepared based on so many other factors. For example, how much you're raising at what round and what's the market climate. There's so many things that go into it. But yes, it is very important to surround yourselves by a good advisory board that's going to help you navigate this storm. This is a very critical decision for the company. And when I say advisory board, please ensure that the board is spelled as BOARD and not BORED, because there are some advisors who are going to bore you to death. So be very selective. And it's very critical to kind of gauge what others are doing, draw parallels, and then see how it applies in your case. But yes, it would vary from one one stage to another, one funding cycle to another. There are so many parameters, so there is not a straight answer for this.
Okay. Yeah, this question was from Savita Mangotra. Another question from Ashish Deva. How can a startup manage rejection from VC and improve their pitch for future attempts? I would like to answer that, Ashish. Uh, don't be afraid of rejections. There was, I believe, 105 pitching that Amazon guys did before they get their first check. And I just published something to this regard on my LinkedIn profile, on my LinkedIn wall, talking about Airbnb and when they pitched, their 8 email rejections that they received from VC when they pitched to them. So don't be afraid of rejection. It is just part of the journey. What Abhi also said earlier on in the podcast, if you do your research, then the rejection rate will go low. Don't propose or reach out to Abhi if you are not ready for him, or if his portfolio company is not in your industry vertical, because then he will have to say no, because he doesn't invest in your industry. So some of things, but Abhi, what is your take on that?
I couldn't agree more with you. A no now doesn't mean a no forever. You have to understand that perseverance and persistence always pays. But if you keep on nagging without a rationale, that is really not perseverance or persistence. It becomes irritation. So what I'm trying to say is that sometimes we win, sometimes we learn. So do not take as a no as a rejection. It is a learning moment. Please request for feedback and then understand what is their understanding, and if it is not a match, understandable. If it was a match and still you could not make it, maybe there is another startup that approached before you. Bad luck, hard luck. But it's very important to kind of keep your um, potentials informed about your journey. Include them, with their permission, of course, if they can include it in the newsletter, showing them that you are making progress. Thereby, it's a very soft passive way of marketing that, hey, you may recall me from our past conversation, and look
Mhm.
what, maybe this might be the time for me to gauge your attention and see if I can come and talk to you.
Yeah, yeah. There is a question from Akash. How can a startup demonstrate scalability and long-term potential to VCs? Long-term potential, Abhi. You are in early stage. You have raised some funds to, angels, friends and family. You have ARR, MRR. How to demonstrate long-term potential to a VC like you?
The long term potential is based on several parameters. But yes, I will start with your approach to your idea, your innovation, what you're trying to do. Meaning, um, if you come to me saying that this is a product market fit approach, but in a sense, what you're trying to do is a problem solution fit, you know what, we would understand that. And that is a very myopic, short sighted view, which will not help you in the long run. What you really need to understand and make us also understand is this is the market, this is the timing. And when you combine the two and the potential that is out there, and you have done a little bit of survey, you have some kind of validation or some kind of traction going on, forget about the MRR and the ARR. If you are able to get signed contracts, that in itself is something that there is a buyer, there is an economic buyer that have chosen you, have made the decision, and you have your some sort of market validation. So it's very important to tie these different pieces of the puzzle together to show that this is how I'm growing. And this is my forecast because of the potential customer acquisitions, the partnerships, the channel partnerships. You need to have that holistic strategy, well informed strategy in place so that I feel confident to bet on you.
Yeah, great. A question from Niban Agarwal. Is it mandatory to raise funds from angel investors before reaching out to VC? Can revenue generating companies directly reach out to VC instead of going to the angel investors?
It is absolutely not mandatory to even get money from VC. Why do you think that it's important to get money from VC? If it's a revenue generating and you have enough growth capital, you don't need external money. You don't. Maybe there are some companies that have not taken even a dime from the venture capitalist. But what they have done is they have bootstrapped and they understood the market sentiment. The business started doing well. They didn't have to engage any external investor. Well, at times they have decided to kind of reach out to kind of gain more traction, ecosystem, have people coming in with that kind of variety of thought process, kind of blending into their the data, the mindset that they have, how to enrich it. So it is not imperative for you to kind of raise funds if you really don't need it. Why would you give out your equity if you don't have to? Because at the
Mhm.
end of the day, this transaction, someone is investing in you. What's ROI for them? What's return on investment? And what is your return on intention for them? Both return on investment and return on your invest intention, because this market is small, and that's why people love to bet on serial successful entrepreneurs. If you have already have that badge that, oh, I made a successful exit, if that person goes out with a deck and well thought out strategy, that person doesn't need to really kind of work hard to kind of raise funds. So it can go either way. Every journey is unique, every startup is unique, and so there is no one size fits all.
How important is the founding team in the decision making process for VC?
Very, 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 very important. At Seracap, we all believe we invest on the jockey, not the horse. The horse being the company, the jockey being the team, because teamwork makes the dream work. And this is the team that's gonna is gonna transform an idea, a thought process, a nebulous thought process into a unicorn, potential unicorn. So the team has to work together, and that's when we have to see the team has to be a whole rounded team. The founder doesn't have to do everything. The founder have to have people surround himself or herself around them to kind of create this good team that was going to be comprising of a dreamer, a definer, a delegator. Yes, you need a delegator as well in the team to make sure everything going well, the driver and the doer. This five characteristics is very critical. It may be in the same person, may not be in the same person, combination, individual, but the fact remains, you need to be able to surround yourself by a tribe that reflects your vibe. It's very, very critical. And that is very important for us as to who the people are, who we are investing in.
Mhm. Great. Thank you so much, Abhi. We have one or two more questions that I'll be taking in through all our wherever this broadcast is happening, like LinkedIn, YouTube, X, and all. We have over 100 people listening in as a live audience, and obviously it is getting recorded. It will be repurposed. So thank you, audience, for joining us and listening to us. Krunal asked, what role does industry expertise play in a VC investment decision? So what he means that, if a founder is from the industry, does that help a VC to decide on investing in a deal?
I would say it would be a phenomenal leg up in the game. You definitely have an advantage if you come from that domain, understand the domain to an extent that it doesn't become your blind side and your baggage. Because at the end of the day, the domain expertise is acquired being in the industry and maybe engaging with the corporate side of the world. There are reasons as to why most of the innovation happens outside the behemoths. It's the small startups who do amazing, and then this behemoth starts acquiring them. So having the knowledge is very critical. That gives you credibility in terms of why are you even thinking about this solution and why you think that there is a problem. You have people in the industry who will vouch for you that yes, you're absolutely right, and we support you. Once you make this happen, we will be the first adopters. So coming from the industry, I would say that it's a wonderful thing to have on your back pocket when you're dealing with investors.
Thank you so much, Abhi. That brings to the end of the show. It is 9:30, a.m. here in Los Angeles. Thank you so much, Abhi, for giving your valuable time to come on the show. And we will try to do a follow-on with you, permitting your time schedule in some near future. Thank you so much.
Thank you so much for having me. Really appreciate it. Have a wonderful day.
Okay, it was really good.